India's most premium fintech brand built exclusively for the top 1% financial savvy customers is now on the verge of collapse. Cred, once valued at $6.4 billion, is facing a crisis that nobody saw coming. In 2018, India's most elite credit card users had finally found their perfect app. Cred became the playground for the country's wealthiest spenders, processing a staggering 8.5 lakh crores in payments, with over 1.26 crore monthly users swiping their premium cards through the platform. This wasn't just another fintech app. This was the VIP launch of digital payments. Cred smashed the records by becoming a unicorn in just 29 months, one of the fastest Indian startups ever to hit that milestone. By 2022, its valuation had skyrocketed to an eye-watering $6.4 billion, backed by one of the biggest names in global venture capital, like Sequoia, Tiger Global, DST Global, Ribbit Capital, all placing massive bets on this golden child of Indian fintech. But then something went terribly wrong. Fast forward to 2025 and that $6.4 billion valuation has been slashed to almost half, now sitting at just $3.5 billion. A brutal 45% crash. The user growth that once seemed unstoppable has now frozen at around 13 million monthly active users, barely moving for months. And despite years of burning through investor money, Cred is still bleeding cash, posting a total loss of 1,457 crores in financial year 2025. So, what happened? How did an app with the richest and the most loyal customer base in India go from being the hottest fintech sensation to teetering on the edge of collapse? To understand why Cred is struggling today, we need to go back to 2018 when Kunal Shah started the company. Kunal wasn't new to business. He had already built and sold Freecharge twice, first to Snapdeal in 2015 and then to Axis Bank in 2017. By this time, he had a different idea. He wasn't just building another payments app. He was building a members-only club. The rule is that only people with credit scores above 750 could access the app. That's India's top 1% when it comes to managing money. Kunal thought that if someone has a high credit score, they are trustworthy. So build a platform for trustworthy people and good business will follow. But why would anyone need another app just to pay for their credit card bills? Because back then, paying your credit card bills in India was genuinely painful. You had to open slow, outdated bank websites that looked ancient. You had to click through a dozen confusing pages, and if you forgot to pay on time, you would get hit with heavy late fees and your credit score would drop. Millions of people with good credit cards were either frustrated with the process or simply forgot to pay. And that's where Cred stepped in. The app made everything easy. It pulled all your credit card details automatically by reading your emails. It sent you reminders so you would never miss a payment. And moreover, every time you paid your bill, you earned Cred coins. You could use those coins to spin a lucky draw and win awards like discounts, cashbacks, exclusive deals, and even luxury experiences. So suddenly, paying your credit card bill wasn't boring anymore. It felt exciting, it felt rewarding, and for India's wealthiest people, it became something they actually looked forward to. By 2021, Cred had grown to nearly 5.9 million users. That might not sound massive compared to other apps, but remember, Cred only allowed people with credit scores above 750 to join. Getting 6 million of India's richest, most financially responsible people onto one platform was actually a big deal. Even more impressive, Cred was now handling 20% of all credit card bill payments in India. 1 out of every 5 credit card bills was paid in the country using this app. That's what the big investors noticed. Even though Cred wasn't making much money at this point, huge venture capital firms like Sequoia and Tiger Global poured in hundreds of million dollars in this company. Between 2019 and 2022, Cred was in the middle of India's biggest startup funding party. Investors kept pouring in more and more money and the company's value kept climbing. In 2019, they raised $30 million from Sequoia Capital. In 2020, they raised $81 million and were valued at $800 million. By April 2021, they raised $215 million and hit $2 billion in value, making Cred a unicorn company. Just 6 months later, the value jumped to $5.5 billion and by June 2022, it reached $6.4 billion. In less than a year and a half, Cred's value had become 3 times bigger. But Cred didn't want to be just a bill payment app anymore. They wanted to grow bigger and make real money. So between 2021 and 2024, they tried launching several new things. The first was Cred Mint, which was launched in August 2021. The idea was that you could lend your money to other Cred users and earn 9% interest every year. The borrowers would pay 12 to 13% interest and Cred would keep the extra profit. Cred partnered with another company called Liqui Loans to handle the actual loans since they had proper RBI license for this. For 3 years, it worked just fine. Lots of people were using it to lend and borrow money. But in August 2024, the RBI said, stop, this isn't allowed anymore. Why? Because Cred Mint only let Cred users to lend to other Cred users. It was like a private club. The RBI wanted that the lending platforms should be open to everyone and not just the member of one app. So Cred had to finally shut down the Cred Mint completely. Then came the Cred Flash, their own buy now and pay later services, trying to compete with Flipkart and Amazon. But the whole buy now and pay later businesses were already facing heat from regulators and investors weren't sure if anyone was actually making money from it. So it did not succeed. The biggest change came when Cred decided to get into the loan business. They started giving out instant personal loans through Cred Cash and letting people borrow for shopping through Cred Pay. And suddenly their income shot up. From 422 crores in financial year 2022, it jumped all the way to 2,473 crores in financial year 2024. That's almost 6 times more than in just 2 years. But it had 3 problems that eventually destroyed it. First, the pricing wasn't honest. Cred would take loans from banks like IDFC at 12.5% interest and then gave that to its users at 4.5% interest. The extra 2% went to Cred. But users were angry due to the hidden commission earning of Cred. Cred never explained this clearly and people clearly felt tricked. Second, these loans had no safety. Cred didn't ask for any collateral against these loans. They gave out loans worth lakhs just based on credit score. When the RBI made stricter rules for unsecured personal loans in 2024, this became very difficult to continue. But the third problem was a real disaster. Cred used something called FLDG, First Loss Default Guarantee, which basically means if someone didn't pay back their loan, Cred would pay the bank from its own money. The banks were safe and happy. Cred earned 2% on every loan. When everything was going well, that 2% meant big money coming in. But when people started defaulting these loans, Cred had to cover those losses from its own cash. That 2% wasn't a profit anymore. It was going straight into paying back the banks for the bad loans. Cred was burning its own money just to keep its deal with the banks. In financial year 2024, Cred lost 1,644 crore rupees. That's 22% more than the year before. Even though their income had grown by 66%, they were making more money than ever before but somehow losing even more. By financial year 2025, the damage was clear. Revenue grew only 20% compared to 67% the year before. Cred was still losing money and now it was growing slower too. Investors were not happy anymore. Well, this was not all. Cred tried another way to make money, and that is Cred Rent Pay. It started around 2020-21. The idea was fairly simple. Pay your monthly rent using your credit card through the Cred app. The money goes straight into the landlord's account and Cred charged a small fee, around 1% to 1.75% plus GST. In return, you got credit card reward points and Cred coins. It became super popular, but people weren't using it to pay rent. They were using it to turn credit card money into cash. So normally if you withdraw cash from your credit card, banks would charge somewhere around 25 to 30% in fees, and that's very expensive. But with Cred Rent Pay, people found a loophole. They would pay rent to a friend or a family member for 50,000. Cred charged only 1.5%. The friend would withdraw the cash and give it back to them. And people started doing this openly. Reddit was full of tips on how to do it. Some people even created fake landlord networks and charged 500 to 1000 rupees per transaction to help people convert money. Then came the RBI guidelines for the credit card rent payment, and Cred has to stop their Cred Rent Pay feature. But beyond these big failures, there were smaller things that quietly made Cred's customers angry. Cred's whole appeal was if you pay your bills, you earn coins and win prizes. But former employees revealed it was just for show. Companies would pay Cred 4 to 10 rupees per voucher whether anyone actually got it or not. So Cred would show big flashy prizes that almost no one ever won. One user even shared their story on social media. I paid a 1.2 lakh rupees credit card bill and just got 3 Cred coins. It felt like a joke. Social media was full of people making fun of how useless Cred coins were. Another thing is that Cred was collecting tons of user data, credit scores, spending habits and everything. They said they didn't take the credit scores, but they let the advertisers target people based on those scores anyway. Users started feeling uncomfortable. Even RBI noticed it. They started checking how fintech companies handle user data, and Cred was on the list. Due to this, customers lost trust, investors got worried, and in 2025 it showed up. Cred raised $75 million from old investors like GIC and Sofina. But by this time, Cred's value dropped from $6.5 billion to just $3.5 billion. That's almost half. So Cred's future is now uncertain unless they find a new way to win back trust. The company that once seemed unbeatable might not even make it. What's your experience with Cred? Let me know in the comments.